Hello guys and welcome to another post-market analysis of Bank Nifty on October 27, 2023. So this was the Bank Nifty's today's price action in a time frame of 5 minutes. But let's, as usual, go to our one-day chart and start from there. But since today is the last day of this week, let's start with the week candles chart. Okay, please ignore any background noises for today. There is some work going on, renovation work going on in the neighborhood. All right, so this is our weekly chart, which means every candle of yours is a weekly candle. Each candle represents one entire week's time period. So this is the last candle. That means this was this week's a candle, which has closed the support area. The support area is important because this was once our resistance area, and which is now acting as a support area. Okay, for a couple of times, and also the key formation here is we do have the same double top pattern even in our weekly chart. You see, this is your this is your double top formation, and here it would have become a triple bottom, but prices didn't bounce back from there. It was just one green candle. So we have seen a proper breakout here with today's candle, I mean this week's candle closing. Whereas in our daily chart, so we should wait for this candle and see what will happen in the long run, whether we'll get a pullback towards the support area and prices will test there, or the prices will go down. You see, the next farthest area, of course, it will not happen in a week or so. So in the coming couple of months, if the market is coming downside, we may see the market coming down all the way to 39,300 levels, because that was the key area from where prices have suddenly started going up. uh, or we don't know whether it is coming back. If the market, any weekly candle here is closing above this support zone, then we might think that the trend got reversed. So that's up with the weekly candles chart there. In our daily charts, as usual, we have been talking from days now, since this pattern formation. We have seen a breakout. In yesterday's pre-market analysis video, we said that a pullback is expected, but we don't know whether it will happen yesterday or today. So finally, we can see the pullback here. Okay, we can see this green candle is today's candle. So this green candle has seen a pullback here, but it was not that great. It's not a very strong pullback. Now if the candle if this two candles setup, if you see market again closing below this low, then again market is going to be back in its downtrend. So in both the charts, see, in both these charts, we can see that the market is very clearly in a major downtrend. This one green candle does not make this as a uptrend. It is just a counter move. It is just a counter move today. We cannot take this as a trend change, or go consider it as an uptrend until you see a closing above 44,100 levels. Till then, it is, we'll consider it as a major downtrend only. Now let's get into our, okay. So let's get into our intraday's frame, that is 5 minutes, and then see what we can learn today from today's price action. Okay, all right. Let me close this RSI. Okay, so here, this is today's price action. This entire zone here, all this set of candles are representing today's entire day's price action in 5 minutes a time frame. But let's start from the beginning. Okay, let's start from the beginning and see if there was any chance for us to take a trade today. This is a post-market analysis, so we'll go can almost through every candle and see, almost through every movement, and see where was the actual chance for us. Okay, so market has opened at 42,570 level, and then it has seen only one bearish candle, after which yes, the second candle is immediately the green candle here, right here. Okay, unlike unlike in the previous couple of days market, that was not the scenario. See, this day for example, after opening you have seen three multiple red candles there. Even the day before that, on Wednesday, you have seen the market has opened up there, but seen a good three candle down movement there. And so even the day before, Monday, market has opened up with a red candle and has that means the first 15 or 20 minutes for the entire week, this week we have seen a bearish momentum in even in the initial stages of the market. But today, even the second candle is not so bearish. There was some hesitation. So markets from this level have clearly moved. Markets from this level have clearly moved towards the uptrend. So it has built up a small momentum here. Okay, and this, there was a halt there, but this was the first candle that you have to pay very attention into, this candle, because this is a formation called shooting star. Okay, which is a very important reversal signal in an uptrend. But we cannot enter into any trade based on one single candle without multiple confirmations. So if you further just zoom back and see, this is the gap that yesterday markets has left us. So it has rejected exactly there. Okay, and it has also moved down here. Okay, it has, this one single candle has given a momentum of this much, and there was, I've just shown you, there was some gap there. So at this level when the market is here, at this level when the market is here, you can you can safely assume that is a this is a resistance zone. Okay, because from this candle there was a decent downside moment, but we cannot get into this trade because it is just one single candle, and your gap was before, I mean, one day back gap. So don't get into the unnecessary urgency to get into the trade. Wait for the proper swing high, swing low formations at least. Okay, here in this case, again from here market has gone into this previously drawn resistance area, that is this. So since market has again reacted from there and came till here, we can now assume this as our recent. We can now assume this as our recent support zone, another support zone. Okay. Now this was interesting here when you see this candle. If you are seeing all of our videos, you know that how to identify a proper breakout or a false breakout. So in this case, this is a proper failed breakout because you have not seen any follow-up candle after this. There is no confirmation. There is no confirmation after this breakout candle. So you would have not taken this trade. But what's interesting here is this bullish engulfing pattern right here. Okay, so this bullish engulfing pattern right here is a beautiful formation, especially you're seeing it after a recent swing high. So you're seeing it after a decent downtrend. This bullish engulfing panel is a bullish sign, and that too it is coming at this your previously drawn resistance area, which is now your support area. We are seeing this candle formation there, but also that shouldn't be your take, because if you are seeing, if you're being bullish at this level, okay, the first hindrance that the market has reacted from that point, and we also know that there is a gap up zone there coming from the previous day. So this would have been your first hindrance level, first hurdle, if you are taking a long position there. But whereas your risk must have been below this candle's formation, which means that There is no proper risk versus reward ratio. In this case, it is if it is not even one. That means you are earning 60 paisa, you are losing 1 rupee. So there is no because of the proper there is no proper risk versus reward ratio. We couldn't take that trade. So now we'll extend this after. Let's see what market has done. And here, this was a proper bearish engulfing pattern. This was a proper bearish engulfing pattern, and this was your entire support area. You would have risked. You would have risked here if your risk versus reward ratio was good. So in this case, because that is a bearish engulfing pattern, and that is coming after a decent uptrend, and it is coming at your almost near your support area. So all these points are giving us a chance to think about this, but you have to check the risk versus reward ratio. So if the market is coming down, it should come down to this level. This is your first hurdle. So here in this case, yes, the risk versus reward ratio is at least 1. So this would have been your trade, and it worked beautifully. It was not a great moment, but it is a proper moment. You have proper reasons to enter into this trade. I'll once again tell you, your first reason is this is a resistance, a previous swing high. And your second reason would be the gap that is coming from that direction. And your third reason would be this, the bullish engulfing pattern. And your fourth reason would be your risk versus reward ratio. Your fourth reason is the risk versus reward ratio till here. Okay, so all this are giving us a confirmation. So this might have been trade, but you see what's happening here is these prices are coming. So it is here the first time. See, this is coming from the starting point of this entire resistance area is coming from this zone. So from there, you have seen prices gone up, again coming to this zone, again gone up, again coming to this zone, again spending a couple of candles here. So this support area, after seeing this many whipsaws up and down, it's not very good idea to further prolong it and keep it intact. So we'll remove that and look for the next possibly the next possible resistance area, or in this, if the market is coming down here, we'll look for the next support area, which is this, because this was never broken. This support area there was never broken. And when the market, see, you would have exited this trade, right? So now imagine when the market is here. Okay, now imagine when the market was there, which means this much is your movement so far in the bank nifty. Here what you can do is you can adjust your support area that you have previously drawn till there, because that is your reaction there. All right. So even if the market is coming down, there is a couple of an intraday support area here. So you would have not taken this trade, because all these are rejection levels. All these are rejection levels. So you would have not taken that trade there. So now the market is continuously uh, traded for the sideways from almost 1230 to 130, 140. It is this 140 candle, but if you notice in between it, you have seen our videos on hammer formation. You can say that no, these two are almost near candle, almost near hammer stick candle, but they are not. All right, your first indication, your first positive sign here is your this engulfing setup. Okay, so there was a bullish engulfing pattern there, and also it is coming up well in the support area. This entire zone is your support area, right? So it is taking that support. And since the market, if it is going down, it would have you would have taken position only beyond this, but it has spent a good amount of time here and failed to close below this after trading for 1 hour. And after 1 hour, you are seeing that there is a proper bullish engulfing pattern here. So now in this direction, if the market, if you want to take a trade, your first major hurdle would be that line. So now I'll remove. See, this was your resistant line that you have drawn, and now this would have been your target. So from here, Okay, from here you would have checked your risk versus reward ratio in this case, which is, yes, which is there, and your uh, risk should have been this bullish engulfing pattern, which is close to 1 is to 1 ratio. So this worked. Even this trade was your profit exactly till there. Okay, and if you notice in between, you could have added positions. You could have added to more positions when the market was there, because there was this was your second bullish engulfing pattern appearing there. So your first target was hit, and this was your second resistance line. After crossing that, even that was achieved if you are trailing your stop loss. Okay, even that was achieved. So you would have exited at that level. So here this was around 76 points. So after this there was some breakout of from this resistance line, but again failed to see the follow through. Again there was a breakdown here. Okay, again there was a breakdown there, and again there was a bullish engulfing pattern here, but there is not enough movement left with the risk versus reward ratio, and again there is no clear targets seen towards the upper side. So again this was your sideways market till 3 3 15, and in towards the close you have seen some up move. So for this day you have only two trades that might have worked, that is 76 points and 52 points, that is close to 130 points on a weekend day is not bad in Bank Nifty. All right, hope you have understood something. Hope you have understood the importance of drawing as a resistance and support area, and keep updating and keep modifying it according to the price action with the previous swing highs and lows. Okay, I hope you have learned something, and please do subscribe for more such case studies in the Bank Nifty. And for this weekend, if you don't want to waste your time, we are coming up with one more candlestick pattern. We already have a hammer, hanging man, and a bullish engulfing pattern. So you can see those videos and learn, and make use of your weekend, so that you will be prepared for the next coming days. Thank you so much for watching.